All right, good morning, KW South Bay. How's everyone doing? Awesome. Thank you so much for being here. Can you believe it's already the 19th of March? Yeah, Q1 is almost done, almost done. So we got a lot of great stuff today. So impactful team meeting today, and a lot of talk around the Zillow thing. So we're going to talk a little bit about it too. So before we do so, please make sure, out of respect for your peers, to silence your phones. Okay, because if we hear your phone ring, we are going to ask for $100 for KW Cares. Just kidding. All right. Let's continue. Next slide. All right, our mission: to provide agents with a place where they will be empowered, trained, and motivated to experience growth, wealth, and a legacy that allows them to live their best life possible. Our belief: when the values of your own company align with your own beliefs, you know you found your professional home. Our vision: to achieve amazing professional and personal development so that KW South Bay remains the agency of, yes, agency of choice. Next slide, please. All right, just a reminder, your support team, all of these individuals are here to support you and your business and your clients. Just a reminder, we're here to support you. Next slide. We also want to introduce you to the newest agents in the office, Scott Bright. I got to share a story with Scott. Okay. Scott has been in the industry for a while. He's been with KW, left KW, and now he's back at KW, okay? The funny thing is, when we were having conversations, I was able to recruit him back over the phone. So I've never actually met him in person. The funny thing is, check this out. He's going to cap with the company because he's expecting a referral of $154,000. Yeah, and I was like, what? He goes, yeah. He put a deal on 2 warehouses in Ontario and Riverside, connected the buyer and with the agents there, and they're going to send a referral fee for that amount. So imagine that, ladies and gentlemen, the cool thing about what we do in our industry. Now, he was hands off on this. He literally didn't do anything but connect the buyer with another agent that had this commercial off market, and now they're going to be sending them a compensation. So super grateful to have Scott as part of the team, and that's just one. He has 2 more deals coming in, again, as a referral. So we're super excited to have him. Latanya also, if you get a chance to meet her, she's amazing. And Marcel Seals, also part of the KW South Bay. Next slide, please. All right, if I can get Mr. Manny Atias. Let's give Manny a round of applause real quick. Awesome, sir. All right. How many people have heard about what's happening with this new merger with KW and Zillow? Yeah. Awesome. Well, this is some great stuff. Joe.
I've heard that we're now going to have access for early exposure.
Okay.
Basically, like coming soon, or I don't even know if it has to be off market, or I don't know the details, but I've heard about it.
So Manny, can we share a little bit?
So we know absolutely nothing about it. Yeah, so it's only 2 of us, actually 3.
3 of
Simon. But by the way, on the Zoom, Natalie, can you hear me fine? I'll just turn on the mic over here. Basically, it's very similar to the new trend that is going on right now by other big companies that are trying to basically, I don't want to say eliminate the MLS, but they're trying to create a different path of exposing their inventory to the public. So far, so good?
Yeah.
And if you remember what happened, I think it was in May 2020, the clear policy kicked in. But basically what happened was that there were companies out there nationwide that were exposing their inventory privately. And at times it was justified reasons where it was just the seller don't want to be known about the reason that they are selling the house or what have you. In most cases, it was not justifiable. It was more like a kind of what we used to call pocket listings. Did you ever hear about that term in the past?
Yeah.
And it didn't really serve both the consumer and clearly, us realtors, because we want to, I might have the buyer for you. Why do you keep it in your pocket, right, for so long? So clear policy kicked in. Some companies, Campus was the leading company to fight it, basically. They do whatever they can, again, just to eliminate the MLS because they want to have their own thing. This doesn't mean that the MLS, that we do the same thing, but it's just a partnership between KW and Zillow to be able to expose to the public whatever is either coming soon or exclusive. Now, I'm not sure if you saw, I think today or yesterday, other companies with Realtor.com, Homes.com, I don't know who goes on Homes.com, but whatever, it's all good. Campus and Redfin, etc. Here's the problem, though, and I'm gonna leave you with this: is there is a conflict between what the MLS is permitting or forbidding us to do, and what all those things are there for us at some point to be able to do, right? Meaning we still cannot go and publicly trade or publicly announce or promote listings in any shape and form that are not on the MLS. Even if they're like pocket or whatever it is. No, even no contract. We cannot do it. That's the issue. So there's still conflict. They didn't announce it. It's pretty awesome in theory. We don't know how it's going to look like yet. So that's pretty much what it is.
And just to add to Minnie, so the clear cooperation is still in effect. MLS is still in effect, right? We still cannot promote to the mass without being in compliance with MLS, right? So if you're planning to still market your property, we still have to go through the process and the procedures with the MLS. As Benny was saying, it's still in the beginning stages. We still don't know the uncertainty of how all this is going to align. We don't even know when it's actually going to be officially launched as of yet. But the good thing is, and if you can do the next slide, the cool thing about partnering up with Zillow is look at the consumer and how we get stacked compared to other platforms, right? Realtors.com, Redfin, Homes.com. We're going to be the leading partnership with Zillow. So this is a good indicator on how many visits people. That's usually where most people typically go, is through Zillow, right? You can go to Zillow in any part of the state and even parts of the world and look at real estate. So this is a good indicator that's going to help us, merge and be in partnership. So, any other questions, thoughts as we get more and more details from it?
Do you have a timeline for how long this process is going to take to figure it out?
No, there's still no timeline as of yet. Yeah, so as soon as we get more information, we'll be sending all that information to all of you as well. So
yeah,
they're going to give us an opportunity to, because right now Zillow shut off to everybody. We just took their present people. Like I was a Zillow Premier agent for like 7 years, 5 years, 7 years. And then they started giving me like really weird leads, like mobile homes in Palm Springs. And so I told them, I said, I don't want mobile homes.
Can I just, because we're going to a rabbit hole, and it's not, this is not the space right now to go over that, but just like in quick short thing. And I also know that Jamie, I saw your hand raised on the chat. Look, we don't know much. So let's not go too deep to that. It's going to be a waste of time, I promise you. But technically what they say is when you're going to put your listing out there, right, through the MLS or through Zillow directly, allegedly, etc., you're going to be the main listing agent. The consumer is still going to have an option. Oh, by the way, you can also check out those agents, because those are what used to be Premier, now it's Flex. the consumer can do whatever they want. They want to call you, great. If they don't comfortable to talk to a listing agent, they're going to reach out to someone else. Maybe they already have someone, but the funnel is going to go to us first. There's also like a commission exchange where you guys are going to get a passive referral fee from Zillow's pocket if someone tapped into that listing of yours, whatever they're talking about, and anybody else out there sold this listing, you're going to get the referral fee, both you and the brokerage. So it's 10% from their pocket, which is pretty nice. But again, this is all allegedly. We don't want to go too deep. I just want to make sure that you know that it was announced and to be continued. Jamie, quick question before we're going to move on because we have a lot to cover.
Yeah, sure. I also heard something, and I'm not sure, but in 2026 January, that we don't now, I mean, I understand this whole program works with, it's going to also have to work with the local MLSs that we've got. But I also heard, because of all the lawsuits with NAR, that we now as agents don't have to belong to NAR, or I guess what that is we're not forced, they're not the gatekeeper anymore for all MLSs. So is that something where they're going to address that, and that it's just going to go then really hyper local?
We're not forced to do anything. It's just a matter of choice. And as a brokerage, let me just answer that part. I'm not sure if I understand your question, but as a brokerage, we require all of our associates to be members of a local board, and as a result, the state and the national association, because we okay to adhere to higher set of rules. That's number one. So that's nothing to do with any level of what have you. This is just a policy of our company, like many other companies. Does that make sense?
Yeah, I think so. So I was wondering, because I couldn't even join my local MLS board without becoming a member of NAR. So there was something that shifted. I just didn't know if that was filtering down to all of these partnerships with all these different, like Trulia and Zillow and whatever.
We don't know. Yeah, it's a good point, but we don't know yet. We have no idea.
Let me just add to that, because the brokerage, so it really boils down to the brokerage. The brokerage, if the brokerage is part of the association, then all associates, broker associates, salespersons have to belong to the local board as well. Now, there's brokerage out there that are not part of the National Association or part of a board. That's a different, and most of your commercial type brokerages, right? So it's a difference between, brokerages that are part of the National and the California Association, but agents that are part of a company that is broker member has to be part of it as well. Yeah. So, all right. Any other questions? All right. Let's continue. So Minnie, we're going to put you aside for a little bit. And next slide, please. Let's bring on Sign HQ, who provided us with lunch. Give a round of applause to Brandy Colleton. Thank you very much for being here.
Hey.
You can leave it there. Yeah.
Brandy with Sign HQ, your one-stop shop for all your real estate marketing needs. I am your sign company. We do for sale signs, open house signs, banners, commercial signs, anything you need basically to market yourself out there. Your signage is the first thing your clients are going to see. When they see a house, it's going to see your signs. Your signs need to look good. So we're going to do our best to make your photos and your artwork look really good. If something you send to us like on Canva and it doesn't look good, we're going to fix it for you, because Eddie, who is my husband, he's a graphic designer, and he'll take care of all that for you. So if you don't know how to use Canva or don't know how to use Illustrator and you want us to design something for you, we can do that as well. We also do polos, hats, tents, and banners. And we also do installation service. So if you have a listing for sale, we can go ahead and put the post up for you. We have a flat fee, $45. That would take you all the way to Ventura County, which is the furthest, I think, is Sherman Oaks, Westlake Village, all the way down to Riverside, Fontana, and then all the way Orange County is like San Clemente. All those areas is $45 flat fee. That includes the up and the down. And we can store your sign for you. There's no storage fee. Another cool thing with us that we have the open house installation service. So I have twin boys who are in college and have a little side gig, which is the open house installation. They'll go and put out your open houses for you on the weekends. You have nothing else to take care of only your open house. You don't have to take care about putting up open house signs outside or any of that. They can handle that for you. We don't store those signs for you, but we can pick them up from you on a Friday or on a Thursday and then put them out for you Saturday, Sunday, Friday, Saturday, and Sunday. Yes. 125 a day and up to 25 signs. And they'll take them down for you the same day. Yeah. Some people tell us to leave it there overnight. Unless the agent tells us to leave it there overnight, we'll do it. We don't like to do it because if they get lost, they get vandalized or whatever happens to that, we prefer to go pick them up the same day. That's it.
Awesome.
Oh, also, I'm a giver. So if you have business cards, I would like to give 3 open house signs on us. Also 1 for sale sign, so there'll be 2 winners. So I don't know if I have a little thingy.
Do you want to collect the business card?
Business cards, yeah.
Do you-
You can collect the business cards.
Okay.
Oh,
Did you provide the flyers too as well?
yeah,
Okay.
and they're in the front, but I can, oh. So I forgot to.
Yeah.
Is there a website?
Do we have
Those of
a
us who aren't there.
basket, Natalie, that we can get from Stephanie?
Our website is mysignhq.com.
Here, let me get some business cards here.
So I don't know if there's
Okay.
any veterans in
Thank
the
you.
house, but at Sign HQ, I am a daughter of a veteran, so I
Wow.
get 15% off to all veterans.
Right.
Okay?
Okay. Thank you. Thank you. Thank you. Anyone else? Kevin? Okay. Yes. All right. You do, I'm just gonna,
You shuffle and you pick.
okay. This is the basket here, guys. Here we go. Camila.
Camila, you get the 3 open house signs. So I'll email you.
Awesome. That's awesome. One more?
For sale sign.
Okay, here we go. I'm closing my eyes. Nice scene. All right, it's Chris,
Chris.
the 18th. That's you.
Oh, awesome. So I'll email you. So you win a first sale sign.
Here, she's
You win a first sale sign. So I'll go ahead and email you all the information and artwork and I'll send it your way. You can prove it. Yeah. Yeah. So far, I've given out 3 for sale signs the past couple of weeks, and all 3 of those people already got a listing. So I say we're good luck.
Good luck onto that. One more?
Okay, one more. We'll do another one.
Oh, okay. Okay, here we go.
Do another for sale sign. That way, hope we get more listings here.
Nina!
Same thing. I'll email you. Thank you guys so much. I appreciate you all.
Awesome. Thank you very much. All right, Benny, if I can get you back here, please. Here you go, sir. All right, we got a lot of great stuff to provide you. Next slide, please. All right, here we go. So this is from a family reunion when we were out in Georgia. So next slide, please.
Atlanta, yeah. Quick question, by the way. Do you like the 10:30 a.m. meeting, or should we move it to like 8 o'clock in the morning? Okay. It used to be busier at 12 noon, so I'm just kind of curious about. I see. 8:30 then. Okay. But no, serious question. Like 12 p.m. works better for you technically? I mean, do you think in general? Yeah. Okay.
12 o'clock.
Thank you. Okay, so we're gonna go through a lot of information as we do every 6 months after the main meetings that we go to. And feel free to stop us and ask questions or what have you. We're gonna skip some slides that kind of repeating themselves. After the meeting, you're gonna get an email from, I assume, Natalie or the front desk, Stephanie, with all this information as well. So you can take pictures if you want, or you can just wait for the slides that are gonna be sent to you afterwards. Okay. And someone I'm gonna jump in. Do I have to say the next slide? all the
I'll
time?
say it for you.
Okay. All right.
There we go.
Next slide.
All right.
Okay.
Next slide.
Oh, okay. He has to say it. Otherwise, it's my accent. They don't get it. You gotta use an AI microphone. So, okay. home sales annual. So this one basically shows you in millions, right? What the projected home sales that we're gonna end up the year with. Might be kind of too far from the back, but it says that we're gonna finish this year in 4.3 million homes sold. Okay, 4.3. Whoever can see, if you compare the last few years, at least post-pandemic, is this more or it's more than previous years, right? So it means that this year is gonna be a better year, a busier year, okay, which is a good thing. Now, clearly you can see that there's a whole trend over here, right? And it's not where we want to be. We'll talk about the inventory a bit later on, but it's definitely slightly getting better. So that's the first good news. Next slide.
Yeah, next slide, please.
Okay, I have no idea what that is. Can you maybe escape and refresh? Oh, okay, there we go. Is that the one? Okay. Thank you.
This is the home price.
Okay. Home prices. So that just basically tells you what the median price is. Clearly, like this is not really reflecting our local market. Our average price over here today is about just under $1 million, pretty much. That's the average price in Los Angeles, but it shows you the trend overall. Now, here's the cool thing about this one is, at least from the 90s, there's way more recorded history, prior, but this is good enough for us to understand that. If you look at the blue line reads the trend line. Anybody know what it means? First of all, what is a trend line in percentage? It says 4%, right? So now it stands for what? What's supposed to increase every year by 4% in theory? Appreciation. Okay, so the 4% stands for appreciation. Now, you can see what happened post-crash, 08, and you can see what happened during and post-pandemic and ever since. Now, the projection for this year is for the trend to be about 7.4%. So is this more than the average? Yeah, because the average is 4%. Okay. By the way, I'm kind of talking like that just because some of those things you need to know automatically, because those kind of conversations is what you need to talk to your consumer about. So this is basic real estate 101, right? You don't have to remember the numbers, but just talk the trend pretty much. Because again, those are good news. It means basically that whatever you purchase, right, will appreciate this year by an additional 7%. This is great. Better than the stock market in average, better than any other vehicles out there financially, and average risk, not like high risk vehicles, financial vehicles. So again, if you're talking to someone who's thinking about buying, but they're not sure, this is solid. And even if something's going to happen in the way, your asset is going to keep appreciating. Okay, so there's nothing like real estate.
Can I just add to that, Manny? So
Go for it.
Think of it this way: the people that are on the fence, right, are hesitant to purchase because they're waiting to see if the market will dip down or crash, right? But this is a big indicator as the above the line keeps going up, right? So what they are looking to or what they're looking to wait and hesitate may bite them in the rear, because in a year from now, the same home is going to be worth more money, right? When they could have literally bought now and had that appreciation. So just kind of wanted to add.
Yeah, next slide. In different words, basically, the game over here, it is time, right? Time of ownership, etc., of the asset, but it's an equity game, right? So when people are like, the rates, it's not about the rate. It's about how much you can buy the house for, right? And then how long you're going to hold the house, because it is going to appreciate, period. There's nothing you can do about it. That's what's going to happen. It's only going to go up. Something's going to happen the way, sure, not a problem, but it is eventually is going to keep appreciating, okay? This is, yes.
That last slide was national?
Yes.
Yes.
It's all national.
All national.
It's all national, yes. This is a breakdown based on a period of times that they shown you the annual appreciation, basically. So as you can see right now, we are not historically all-time low, because we had this period post-crash. Okay, that was not the best timing, in real estate for that period of time. But we definitely right now slowly kind of awakening. Right. Next slide.
Yeah.
You might want to refresh. Okay. Just do escape and refresh the whole Canva. Escape for a second, refresh the screen, refresh it. No, just refresh the whole screen, the page.
So I put it on the screen.
Oh, she's right over here.
Yeah, I put her back there today.
Is that like a secret thing? So when I said next slide, she didn't do it. Why? In purpose? That's awesome. I think she's there. And no, I'm going to do like next slide, please. Okay, all right. Same thing, just historical appreciation, just for you guys to know and understand. I would, geek on that for a second if I were you later on, just to understand the trend, right? If you're a pro, if you've been doing this for 30, 40 years, you lived through it. So yeah, I've been there, I remember that, whatever. If you knew where, which is basically I consider 5 years or under, brand, this is fresh in real estate, study this. This is like history about, who you are, where you came from. Same thing applies to us. It's going to make you a better professional. Next slide. Next slide, please, Natalie. Total market volume. I love this slide because this is always the best news for us. I'll tell you why. So it shows you basically what it says that this year, and this is in trillions, we're going to end up the year selling 2.4 trillion. Okay? Now, since 2023, we've been saying the same thing. So look at 2023 over here. If you compare to all the rest of the graph, at least since 99, but it's going historically, those are the best times ever in volume sold, okay? 2023 was the third best year in real estate. You follow me? Volume-wise. It was 22, second best, and 21, number one, the best, right? And then in 2024, we said 2024 is going to be the third best year in real estate. And then in 25, we said it's going to be the third best year in real estate. And this year, we can say again, it's going to be the what? The third best year in real estate. I'm okay with boring and consistent because it's still better than before. You follow? So this year is going to be, once again, the third best year in real estate. And it's just a matter of like if you can, claim your fair share or not, right? So again, great news for us. And then one more thing to point out, look at this trend, 20 years. 20 years ago, almost 4 million agents, licensees in the country. And look about over here, as of last year, it dropped a little bit, about the same number. Doesn't make any sense. Good news for us that are licensed and practicing, full time, because there is way more to capture with the higher price point, technically for way less people if you look at the trend. Way less people, right? So again, more good news if you're doing this full time and you have a plan how to make money. Yes. It's all national, yes. We can get the information. Yeah. We can get the info. We don't have it right now. This is just we're sharing whatever they have from the national convention, but we can definitely get the number. Either way, it's going to be beautiful, right? And I'm not wishing for people not to do this. I mean, we're in the business to have more licensees to do this with, but it means that those are serious will capture more. And we're here to be part of it no matter what, right? Next slide. Inventory, mentioned that. We still, in lower times that we want to. What's considered to be the optimal, the perfect months of inventory? 6 months. Okay. When was the last time you remember 6 months of inventory anywhere? Years, right? By the way, sporadically in some markets, you might see 5, even sometimes 6. Even sometimes like, high price point, if they have a lot of inventory, you're going to see that. But in most cases, the average right now is about 4. But as you can see, it's increasing slowly, which is also a good news. It means there's more inventory for the consumer and for us to trade with. Next slide. It's going to be a breakdown. Oh, you just cut some slide. That's perfect. Mortgage rates, not sure if you're gonna have a lender speak later on. The rates right now are in the sweet spot. It's where they want to see it, where we as an industry want to see it, which is in the mid to high fives, right? Even in the six, it's like, interest rate means what basically? It means what? Cost of money. Okay, yeah, because it's this cost of money pretty much. We'll talk about the Fed level afterwards, so you understand like how it works really. But this is affordable number right now in the fives, and we need to stay in the fives as long as possible. We don't want to see it drop to the twos and threes. We might think it's a cool thing because some of us been there and took advantage of it a few years back, but it's not healthy. It's not steady. It's not reasonable for our kind of industry. Again, we want steady and boring, if possible, right? So fives right now are and they do try to lower it a little bit more. We're going to talk about it in a second.
Can I add to this slide too? This is over a 50-year trend, since 72. In the 80s, early 80s, look at what the rate was, 16.6. That was the interest rate. And guess what? At that time, real estate agents were doing a lot of business during that time with the rates being so high, right? Obviously, the price points were a lot less. But look at, the history from it, where we're at now, it's still great. The rates are still normal, right? What we saw in COVID time, 2.5%, 3% was not a normal market. This is where we're at is considered a normal market.
And remember the 80s, by the way, with 16% rates, and there's another indicator that is extremely important to always know, always remember, and always educate ourselves and other people about, which I'll talk about in a few slides. Okay, next slide. Mortgage rates, just a monthly breakdown since through the January and until January of 26 to show the trend overall. That's for the 30-year fixed. Next slide. This slide indicates that about 50%, almost 50% of the homeowners in the country, the mortgage rate is 4% or higher, right? But if you look at those numbers over here, if I also take the 4%ers, right, combined with the 3%, it's over 50%. Take the one that are 4 to 5%, which is like a very decent rate of today. That's about almost 70% of the homeowners. So it's a pretty good place to be. I hear a lot of chatter about but the sellers, they have 3%. They will never sell. That's not true. Those are limiting beliefs. Selling, buying, it's a matter of need, right? In most cases, and if it's a want, it's us to educate the person why they can keep building wealth. It's not about buying a house. It's about an investment. It's the best investment vehicle in the world, right? So it's about how we're approaching it. But also with that, you can see that there's a 10%ers, and clearly that percentage, 20%, that's a lot of homeowners that is still in the high numbers. And I don't know how recent that is, but there's over there an opportunity to reach out and educate about refinancing or about other options that they might have available for them to save costs. So it's a topic for conversation, pretty much, like most of the stuff out there. Next slide. So what he pointed out, Simon, right, about the rates. Not only you had 16, 17% interest rates back in the 80s, you also had to have 50% affordability. Anybody can explain in a simple way what affordability means in real estate?
That's when they're having it all maintained.
No? What's affordability means? Affordability. So, and that's where the lenders come in to assess the purchase power, if you may. It means that how much of your household income will be directed to home ownership, okay? So if you go back to the 80s, you had to have whatever you earned or your family earned combined, half of that had to go to real estate to just be able to maintain, to own your house. Today, we're looking at about 32%. Is this better? Yeah. So every time you hear someone say, I cannot afford it, ask more questions. Think about yourself even for a second. Anybody here, I'm going to already raise my hand, ever said, I don't know if I can afford it? Raise your hand if you ever said that, or you heard someone said it. I never said, someone else. Fine. Well, ask the question, what does it mean? Educate yourself, but also the right question to ask, okay, can we talk about possibly how you can get to a place where you can afford it? And in real estate, like nothing else, really, there's so many different plans. Fernando is here, he can talk to you about it afterwards. Let me show you how can you buy a house for, you know, in this way or that way, that much down, no down, etc., right? So it's pretty much, again, today, great time to buy real estate because of those indicators, those reasons, right? Next slide. That was affordability. Next slide, next slide. Let's talk about overall US economy. GDP stands for, right? Which means what? In plain language, how much we spend, okay? Basically, the consumption of the overall, you know, consumer in the US. The ideal number they want to see in percentages is what? What's the perfect number? Anybody? 2%, right? You can clearly see what happened when in 2020, when we heard about those masks and about no more toilet paper and stuff like that, right? What happened? Then afterwards, everything like, you know, stay at home and do everything from home. What happened is everything spiked over there, if you remember. But right now we're in a sweet spot. Now, by the way, that's up until December of 25. There's no yet numbers for 26, clearly. But we're in a pretty decent spot when it comes to GDP. Did you say next slide?
I didn't say.
But that was perfect timing, by the way. So because in the next slide, we're going to say the unemployment. And what is the perfect number? There's no perfect, but what is the ideal, more accurately, to say for unemployment? What's the range? 4 to 5%. Okay, 4 to 5%. Now, a question, just basic question. Ideally, if it's going to be like close to zero unemployment, is this a good thing? Is this realistic? Okay, why? Or what does it mean if there was like a very, very low unemployment? Yeah, all of the above. I mean, think about, I mean, by the way, it could be somewhere out there that there's just no more growth of population, but also of jobs, of businesses, of industries, or what have you. So everything is filled. And like you guys mentioned, someone's mentioned like no competition, no nothing. It doesn't really move anything, right? So that's why there's a healthy number for unemployment. Again, we next slide, because it's going to break down a little bit more. We know that there's right now a scarcity in job openings. And this is just next slide is the same thing over here. So this one shows you basically the blue line, the blue graph shows you the unemployment people right now as of December of 2025, 7.5 million, and about 6.5 million of job openings in millions. Okay, so you know it's almost on par when it comes to that, but it doesn't mean it's a good thing. Next slide, you will see. Look at the job growth as of 2025, 181,000 compared to look at historically the numbers. So we know that this is definitely, I'm going to point out later on indicators that we need to watch out for as they share with us. This is one of them, unemployment. Because, you know, clearly as a nation, we need to have more jobs opening when you combine all the factors in the indicators of a healthy economy. Okay, so that's like one of the things that we need to look out for. Next one. This is interesting new slide they added, by the way. So if you're gonna notice the purple boxes, it basically tells you where it should be historically. Okay, sorry, where it should be based on historical data over 10 years average. So they're saying this, and some did grow, and some shrank. If you look at the healthcare industry, instead of growing only by 482,000 jobs, it went up to 781, 2 times almost than what it was supposed to be. So this is definitely a booming business. Okay. And leisure and hospitality, it did grow, not as much as it was supposed to be based on 10 years history trend. Other services, I don't know what that means, what kind of services, financial activities, and mining and lodging as well. Look at what construction kind of break even. Look at the industries that kind of defaulted or went negative. Manufacturing, professional business services. It's really hard to tell because most of you also tagged, if you have LLC, stuff like that, as professional businesses, and can be almost anything pretty much. But you can point this out as maybe small businesses, okay, which is concerning. There's a substantial decline. Government jobs, we know the history of that, the recent history, and trade, transportation, etc. So again, one thing just to look at for based on different variables. We're gonna look in a second. Next slide. Employment, job growth, wealth and income. Do you remember the pinpoint of that?
Yes. So, and looking at the trend for the wealth and income, look at the trends and from the top 1%, how much has increased to the next of 9%, and then the purple to 40%, which is the 50 and 90th, and then the bottom 50%. But this is the growth of income. What does that mean? Anyone?
More money to buy.
Yeah, basically more money to buy goods and services and real estate as part of that process.
And just to point one thing over here, that's the income part. The wealth part, you see the difference, how it's widening today more than ever before between the 1% wealth, the ultra wealthy, and the rest. Anybody can guess why? It's one reason. We all in it. It's real estate.
Yeah.
It's not because they found like a treasure somewhere or cashed out their Bitcoin or what have you. Real estate. Granted, it's both commercial as well and residential. It's all real estate. Okay. So that's one thing again that if you properly educated, and it's never too late because you can also educate the next generation, is about take that dollar and put it into real estate. That's gonna make a difference down the road, significant one. Next slide. Next slide. This one, interesting, by the way, because this is my third or fourth presentation. Every offer is like a different kind of side conversation or conversations. But if you break down by the age of 30, if you take the age of 30, when the baby boomers were 30, Gen X, and then the millennials, they didn't take the Gen Z and the other gens yet for that. Not enough data yet, and age bracket when it comes to the 30, they compared all this data, and it's very interesting. Okay, if you look at the total assets, right? Baby boomers, age 30, 147,000. By the way, this is translated to today's money. So it's not like 147 back then. That's like millions today, right? But this is today's money. So compare baby boomer 147,000 today, millennials 220,000. Okay. Average total debt 53,000 back then, 114 more debt to today's generation. Average mortgage debt 40,000 compared to 76,000. Now, that's a good thing. That's the only debt that you really want to have is mortgage debt, right? That's a good debt. But it doesn't mean that, it can mean that they either own more or because of the cost of, homes today compared to back then, that's part of why it's higher. Average net worth, this is interesting too. 93,000 back then for the 30-year-old in average of today's millennials compared to, baby boomers, compared to millennials today of $104,000. Okay, so the net worth of the average person today increased compared to how it used to be. So again, when people are saying it's worse today, it's not. We have to study those things to understand how the trend is and educate other people to encourage them to keep going with the trend. Does that make sense? Yeah.
I think it is kind of worse, because it doesn't really keep up, if you look at it.
It doesn't what?
Baby boomers, the average, net worth was 90, almost 94. And now the millennials is about 104.
That's a net worth.
Yeah, that's not much of a difference comparing to see how much they actually are making.
If you
They
take,
almost make double, but they're barely up on the net. So where does all that money go?
so, but I don't know. I don't know how they got to those numbers too, right? And what kind of, survey they did. But I think this is good news, because with all the negative conversation about millennials, as an example, right? It's getting worse with the other generation, right? I think. But not that they're getting worse, that the conversation, like the people, put down whatever for no reason. My point is that in the total national debt, we'll say it in a second, and other stuff like that, it's trending upward, not downward. So this is great. This is good news. This is in the positive, not in the negative, right? And again, it's just a reflection. Clearly, there's exception, people that are in the 6 digits, in the 7 digits over here, right? In the millions. It doesn't take much today to be considered a millionaire, by the way, right? Or in the, not a millionaire, I apologize, in the sense of like the bracket where you consider to be in the higher percentage of net worth. I don't know the number, I don't recall the number, but it's not like in the millions, it's in the 6 digits, right? So even if you own a home today, you're definitely in the higher bracket of wealthy in the world, believe it or not. So next slide. How does it affect you? That's a whole different conversation, right? So inflation, that's another important indicator, right? We always want to watch out for. In ideal market, inflation should be what in percentage? 2%, right? 2%. And what is it right now? Indicated as about 2%. So, I mean, most of the signals, right, or the symptoms are for a really good economy. Does it feel like it? I don't know. Yes, to some, no to others. But again, that's why we have to look at all those indicators to understand where it's trending. And when we have a conversation, people are educated, at least we know what they're talking about, or we can educate them to make a right decision. Yes.
The trend happens first, and then the result comes after.
Correct.
So they're saying that ahead of us is going to be a good market with all these figures, with inflation, with mortgage rates and everything else.
Yes.
Everything is headed in the right direction to make a better future. So that's why of course, people say, hey, the market's not really that good right now, but it will be, because all the trends are showing that it should open up to be a good market in the next 2 or 3 months or the next quarter, because of the numbers that are posted now.
Yeah, and just to piggyback on that, when you ask someone and they say the market is not so good, maybe it's not so good for them. If you want to really ask someone opinion and get the positive feedback, ask a busy person about something, right? In most cases, especially about real estate. So, but it depends, like, again, what information you're trying to get. Next slide. I think this is just a breakdown. Okay, this is what I mentioned earlier, talking about the Fed. So there's the chair, right, of the Fed. It's always easier to address this person as the person who's responsible for everything. This is not the case at all. He's just the face that breaking the news. There's a whole committee behind it, right? And they have together to vote and decide what will be the change, right? And I'll talk about that rate in a second, because that affects us as well, because there's the Fed rate and there's the additional rate that the mortgages, the banks adding to determine what will be our, again, mortgage rates, for example, right? But again, it doesn't depend only on one person. There's a whole group over here. And as you can see, the majority are a 14-year term board members appointed by the chair upstairs, and the rest are chosen by local board. So that's why sometimes you hear, like we don't really understand, they said that and this is not about politics, it's just about facts, right? Right now, the government is trying to influence the feds to lower the rates. I think it's the recent news, but the feds is pushing back. It's not the one person, it's a majority of a group. But as you can see, this is 14 years term. Some of them might belong to a different side of the map. So that's why there are those conflicts at times, right? It doesn't mean that, if the government want to do one thing, it's happening right away. So, but it's interesting just to know and understand. This is a new slide that they also showed us. They never showed us before, to understand the background of like how things are happening behind the scenes. Next slide. So this is the Fed policy and mortgage rates. The blue line, Fed's rates. The yellow, mortgage rates. Go back to the interesting years, or years, 21, 22, right? What was the Fed rate? 0.05%. So, and if you add about 2.5, just onto a 2.4, 2.5, that's when you get the interest rates or the mortgage rates. So that's the buffer, right? 2.5, sweet spot? Yeah, about. So you can always do a quick math. If it's like 5%, so the Fed are at 2.5. You follow me? So that's how you can kind of understand and track the differences. So when you hear about the Fed, they're not lowering the mortgage rates. They're affecting the Fed rate. Okay, there's other indicators too to that, right? I'm not going to go too deep into that, but that's why it's important to understand what's trending. Currently, as we mentioned, we definitely see since end of 24, for sure in 25, very slow drop, right? Systematically going into that. So this is another great one, just kind of to learn and understand. Next slide. Treasury yields, again, this is like a 10-year yield. That's the blue line compared to the mortgage rates. They're following each other. Just for you to understand, those who want to geek out on that aspect. But it's clearly, if you understand one, you know how the other is going to react, right? Next slide. Consumer sentiment. This is basically, they went out and bless you, and asked, right, like, what's the call it consumer confidence in a way, right? And it's in decline. It's going up right now, but it's not a real indicator of like how we should be acting, right? That's what we always have to be on top of our game, educate the client, but also always be working towards educating the public about real estate. It doesn't matter what the economy is, it's always the best vehicle for whatever your goal is. Next slide. Same thing over here. This is just a question, is this a good time to buy a home? As of 25, 17% says yes. And you can clearly see this is, since at least 80, 83, 84, what have you, it's a pretty low number. Even though go back to mid 80s, 81%, is this a good time to buy a home with 18% mortgage? Absolutely, 80% of the population. Doesn't make any sense. 50% affordability. You guys are crazy. You guys are crazy, some of you out there. So 17%, but again, it goes back to a lot of factors. I think mostly in our local level, it's just education. Education and just the face-to-face, who we interact with, who we talk with, how we get to our business, who's in our sphere, what kind of people we want to work with. It goes back to education. Again, if you go to the early trends that I showed you earlier, it's the best vehicle to invest in. Next slide. So we mentioned some of those. Next slide, about the risks that they're looking at in this year. So things that might affect, might not. The first thing they mentioned was tariffs. We know right now that there is some kind of a conflict between the Supreme Court that ruled against tariffs, said the tariffs are illegal or something like that, but then the government came back with like different tax, right, to go around it in a way. Not sure how that's going to end up, how that's going to affect. There's a slide later on, you will see that the tariffs today, the amount that the generating income to this country is still like extremely insignificant, even with all those extra changes that happened the last year. But that's one of the things that they looking out for, mostly not to affect inflation in a way. Government shutdowns, we mentioned that. Next slide. We spoke about unemployment. So this is definitely one thing that, regardless to who running what, it's got to change for sure. We got to see that increase of job growth in the marketplace, and hopefully we're going to see more of it this year. Nothing that you and I can control immediately, right? Next slide. This is interesting as well because there is more money that was poured into AI since it became increasingly relevant than all those years that they spend into the internet. It's massive. It's huge money, and more of the bigger corporation taking over and taking control of the AI tools that we're familiar with, right? Is this a good thing, bad thing? I don't know. Honestly, I don't care. Me as a person, as I only use it to specific things. How it's going to affect my life later on, I don't know. And I'm not dealing with what's not in front of me right now. Okay, the other things that we need to worry about. But just for you to be aware that there's a big money is going towards AI, and I don't know how that's gonna affect different parts. The universe already changed. I mean, I think this is mostly, by the way, just one quick note that they mentioned. The big concern over here is mostly about how it's going to affect jobs, and it's true to some aspects, but some aspects it's not really affecting us. And as a realtor, when the AI, right, will be able to come and put the sign out, send the flyers, don't knock in the rain or the sun, whatever, take my job, that's fine. Until then, I'm not worried about it. Simon, you want to say something?
No, I think with now the technology, even 25 years ago, people are going to be wealthier faster this time around than in the previous years or decades.
Me and Florida already used AI to buy a house. So the AI agent he set up, I don't know how he did it because you have to be licensed, but I guess all the forms and everything else, he pulled it off.
But I think also the buyer was virtual, right? And also yeah, I don't know. I didn't hear about that. Next slide. Yeah, fun stuff. Inflation, again, in correlation with correlates with the tariffs. That's just one thing to look out to as well. Next slide. We know there's some action happening in the Middle East, but only the last 5,000 years. Ukraine, Russia conflict still happening. Europe, diplomatic tension in different countries. It doesn't stop, but it was always there. It's just a matter of like how much we hear about it or not. We'll see. It feels like the world is going to a better place overall. Hopefully, that's what we're hoping for, right? But that's one more things just to look out for in that arena. Next slide. As I mentioned to you, the yellow spots. This is where tariffs are today. Part of the income. It's still heavily. This country leans on income tax, social insurances, and retirements money, right? Back at the 200 years ago, that was a different story, right? So even with all the tariffs and whatever, it's just something so insignificant that happens. So just for you to take things into proportion. Next slide. U.S. events. Let's talk about more of, again, local market, national market. Next slide. Sites per agents. Because of the projection of more business, more volume, more units, etc. It means that you guys are going to do more business. Now, it's not going to come to you. This is not the subprime market. that used to be before the crash, you still have to work for it. But if you're going to work for it, you are going to have more business this year. That's the average. Okay, next slide. So it's six sites per agent. And by the way, this is nationwide. If you're doing 6 sites over here, it's pretty good. Average price of 1 million. Do 6 sites in Ohio or some maybe different conversation, but always better news for us because of the price point. Volume per agent. Again, this is just nationwide statistics. So you might sell one house over here for 3 million, but that's just like overall average. It just shows you once again that since in 2023, there's an increase in overall volume per agent. Next slide. Listing with price drop. We do see a slight decrease, which is a good thing. What do you think? Why do you think that there are less listing with price drop?
Their agents are starting to do their homework and adjusting to
right. Also, the consumer, right? They also tapping into what's the trends are and maybe like more in tune with what the agent will tell them to do. And remember, there's always a listing price or selling price and a marketing price. Those always should be different prices. So I see a lot of agents that are using the marketing price as a starting point, and they're in the multiple offers. Like 20 offers. It's crazy today, right? And that in so hard markets as well. So just a matter of like how you're leveraging that and how do you set expectations with the seller from the very beginning. Next slide. New listings, you can see the trend, 24, 4.8, 25, 5.5, and that's going to keep going up into this year as they mentioned earlier. Next slide. Distress sales, if you're still getting the calls or the spam text messages or emails, I'm going to sell you this amazing tool that will change your life forever. Short sales, this and that, list, only click over here and pay that. If you have money to burn and you really want to do it. But if you're going to put the same focus and attention on calling people, do open houses, you're going to make way more money. Okay, so this is not the market for that. Even though it's as you can see, it's like a flat 2% the last 2 years. So next slide, underwater homes. We saw a spike in the last quarter of Q3 of 25. Again, it can be from various reasons, but it doesn't mean that there's anything changing really in that market. Next slide.
Can I just add real quick to that? So what it is typically is, they leverage the real estate. They squeezed as much out of the equity, lines of credit, second loans on the property. And now they're in a financial situation where they have to sell, but the property is obviously not worth on the loan amounts that they have, right? This is like a first, second, and even a third on the loan. And that's where we see typically the underwriters. That's what I've been seeing. Yeah.
It's like 20 loans that I'm looking at.
Credit conditions are indicating that there's a bit of a loosening, right, of what underwriter. Someone said something?
I think.
Loosen the conditions just to make it easier for borrowers to access money, right? So that's that. Next slide, which is a good thing, right? And it's not overly loose. New homes, average, they want to see 1 million homes a year, new construction. The last 3 years we've been slightly under, at least since 2023. So we'll see how much this year is going to look like, but those are not bad numbers, by the way. It's not like what happened post crash, clearly. Okay, so those are pretty decent numbers. Next slide. Loan debt, student loan debt. You can see that there's 2 debts over that are being shown to us, and it's increasing at least on the other debt, which is it's all other consumer debt. Can be anything, credit cards, auto, whatever that is, everything, not mortgage. And then the blue is student loan debt over here, which is pretty consistent, at least since 2020, 1.6 trillion, went slightly higher last year. Right, next slide. Home insurance, that was definitely a concern back in 24, 25. we will, learn about a few escrows that dropped because the consumer, the borrower could not then qualify for the loan because of this new additional payment. Ever since, there's a decline. Clearly, it's still more expensive than it used to be, at least since 2005. But it doesn't interfere as much at the very beginning with the borrowing power. As long as you're smart enough to understand where the person is buying and what the risk, what the cost of the insurances are, like high fire zone or whatever, right away to the lender and ask them to help you to understand what the underwriter needs. And then you will have to go to an insurance agent, and we have a few good ones, and then understand the costs, and then understand if the borrower can qualify for that loan without additional cost. Make sense? So that's pretty much the game, but it's slowly going to a better place. Next slide. We mentioned earlier about baby boomers and different generation. This pretty much shows you that the majority of the wealth today is still being held by the baby boomer generation. Okay, they control 85 trillion in assets. It's almost 50% of all the assets in the United States, all assets, and about almost 20 trillion of them is in real estate. So the next few years, almost 20 trillion is going to trickle down to 73% of baby boomers, 73%, it's a big percentage, say that they want to give all or some of their estates to their children before they die. That's a big percentage. Do that out of this number. And then 30% on average say that they want to give away 30% while they're still alive. Okay? So if you're not tapping into the baby boomer generation to understand how to how to have this conversation with them about wealth transfer, how to hold their estates with their children, about how to manage that. Like, okay, you now inherited this property. Now what? What kind of maybe taxes you're looking at? Depends how the whole title, etc., how the transfer was made. There's a whole science behind it. It's available for you all the time. We're teaching some of those things here regularly. Tap into it because again, this is still the biggest inventory that we are going to see in our lifetime, being passed down to part of the population or us as in transaction. Someone said something?
They gotta manage what they're left with.
Manage or find the right agent to help them to sell that property or exchange it to do something else. Okay? And I see it, by the way, the last few years more than before because of that exchange. People inheriting insane type of properties. But guess what? The day-to-day is not geared to handle that specific chain of hotels or 200 doors apartment building. They just don't want to deal with it at all. They're going to sell it or exchange it. In most cases they just selling the properties and they have the cashing out, right? Who are they going to do it with, right? Residential and commercial. That's where we come into the picture. Next slide. Luxury, next slide. Just overall luxury measurement. This is the world's wealthy. As you can see, the number is increasing, right? In North America specifically, 30 trillion. That's the total wealth that was measured. Part of it clearly is in real estate. Next slide will show you allocation of investments. So as of 2025, real estate is about 19%, cash deposits 26%, fixed income 18%, which is equivalent to real estate. Interesting, right? And then the rest, stock market and other investments. Just to understand the allocation overall. So the wealthy definitely have real estate significantly on par with their income, right? So good to understand. Next one. Days on market. We do see a drop in luxury days on market overall. Next slide. I think it's again comes down to the right pricing that we see out there. As you can see over here, a listing with price drop. Look at the blue one. Those are luxury listings compared to regular listings, right? With price drop significantly less, which at times, you know, it's the opposite in some years. Next slide. Next slide. First-time home buyers, we do see a drop. It's a bit concerning. First-time home buyers. It could be, there's some surveys afterwards you're going to see. Can be age range, can be need, can be other indicators. I think it's partially also education. Maybe younger generation maybe just don't understand access to money or how easy it is to buy a house relatively, not maybe as they think. And other reasons as well, right? Next slide. Primary reasons to purchase a house, still the highest is desire to own a home. Now, we do see a decline. If you go back to 20 years ago, there's a decline. So there's in the last 20 years trend, there's less desire to own a home, right? But I don't know if it's because people just don't understand the meaning of it. They don't think they can do it. Maybe we do know that some generation is still living in, with parents more than it was before by age brackets. Not saying it's a bad thing, but it's a reality that can definitely affect on some of those indicators, right? And the second highest is desire to be closer to family and friends in a larger home. Next slide. I'm going to run through those. Next slide. Looks in searching real estate. First up to buy in a process. People looking online. 46%, 20% reaching out to an agent. So I always say, never discourage. Exactly the opposite. Always encourage people to say, hey, I want you to also go on Redfin, because they're going to go and Zillow and Spilo and whatever it is. Go online, and whatever you see is really good, send it to me. Either I know the agent, I can get more information, but for sure I have access to information, which called the agent remarks or private remarks, that you won't be able to see. So send it to me so I'll be able to get us more information. Does that make sense? So if you're going to team up with the consumer, you're at 66%, right? Don't tell them not to look. Oh, only wait for my emails. No, go out there, do it. They'll do it anyways, right? So work as a team. Next slide. Information sources buyer used. They're still going to go to you to ask the questions. Okay, AI, not AI, doesn't matter. Maybe a virtual AI agent, doesn't matter, but they are going to go to us first to ask the questions, right? And they're going to use whatever virtually to get more data clearly. So always encourage them to make sure they know that it's okay to do it.
But look at the percentage too, guys. I mean, it's still high for real estate agents. So they do need us based on this information.
Next slide. Buyers found home they purchased, internet, agent. In most cases, it's kind of repeating itself. Next slide. Value website features. That's kind of break down when you have a website or when you publish your stuff, maybe through like one pager or what have you. Make sure that those things are the yellow ones is what the consumer is looking for. So make sure you're not cutting corners in the property information and the pictures, etc. Right? Don't take pictures with your phone unless you can kind of process them or you have a really good phone. That's okay too. But I always say, invest the money on your resume. This is basically your track record, part of what we do for a living. Next slide. Method of home purchase, 88% using an agent. Okay, it's kind of, again, repeating itself, echoing that we're still the most essential part of the home buying, selling, whatever process in real estate. Next slide. This is really important. I would say take a picture of this. Take a picture of this. And basically, this is what buyers want from their agent. They want you, the most important thing for them is help finding the right home to purchase. Help finding the right home. Not finding a home, the right home for them. And then, the lowest percentage, but, help negotiation, help with the price negotiation, etc. So really, when you're asking the questions, you rather ask 100 questions and show them 3 to 4 homes than ask little questions and show them 100 homes. If you're showing someone 100 homes, it can be 50, it can be even 30, whatever it is. It's most likely because you don't really know what they're looking for. So it's such a waste of time. And you can say whatever, they can say whatever. I know of buyers of agents that systematically, it's one weekend and they know exactly, because they know exactly what to show the client, this is the house. Because they're asking 100 questions before they're going to show the house, right? So be an expert, because again, the most important thing is help finding the right home to purchase. And when you do, by the way, do something viral on, you know, social media, what have you, maybe part of your bio, your resume, what have you, make sure to use some of those keywords, at least the top 3. That's why I said take a screenshot, go on chat, add that screenshot, add your link to your LinkedIn or what have you, and ask her to revise my bio using those 3 top indicators. Okay, next slide. How buyers found their agent, 43% referred by, so referral. And the next 15% used the agent previously. Okay, relationship based. So you just have to ask for the business and stay in relationship so they can remember you, and gonna send them the client to you. And why? Next slide. Because 74% of buyer population only spoke to one agent. That's crazy. Think about this. You guys are crazy if you don't do open houses. Are you talking his 6-pack or my face? Took a picture of his 6-pack? Okay. He was posing, so I wasn't sure. One agent, if you don't do open houses, you are crazy. And don't say I don't have listings. Well, we have so many listings between our office. We have 1,000 agents, right? We did almost 3 billion last year. You can definitely grab at least one property a week to do open house. During the week, weekend, doesn't matter, because 74% who's going to meet with you, they're going to use you as their agent. Next slide. 80%, almost 80% that been asked, is this real estate is a good investment? They said absolutely yes. And is it better than stocks? 40%, 44% said it's better, and 38 says it's as good as, right? So it's still, there's a positive, again, approach, right, or perception about real estate as a good investment. If that, by the way, should be way more than that, it's just us educating the consumer, right? Next slide. Buy, repeat, and referrals. This shows you, again, just the trend throughout the years since 2014. Next slide. Buyer and seller satisfaction. Overall indicators. Next slide. That's on the seller side. How seller found their agent. 37% sent in referral. 29%, higher percentage, work with their previous agent. So you have to stay in touch, and you have to ask, who do you know? Don't ask yes, no question like, do you know anybody? Ask, who do you know that I can also help with, etc. Next slide. Seller interviews, 80%, one agent, 80%.
Huge.
You know, so if you have, yeah, but they're going to talk to you a lot of other people, and, you know, I'm not as experienced it or whatever, it doesn't matter. 80% going to meet one agent. You just need to know how to impress them with your confidence and with your attitude of I'm here to serve, and I'm here to guide you through the process, and I have the best team to help with that. That's pretty much it, right? And there's other indicators we're going to see in a second as well. They're going to help you out. Next slide. What sellers want from their agent? Sent in over here. Take a screenshot, ChatGPT, etc. As I told you, help the price of the home that it will sell. Help seller market the home. Help to sell the house with specific time frame. So I would say, even if you're going to get possibly a listing that you know it's overpriced, but you still think it's reasonably okay to handle, 100% the homeowner got to be a nice person. If they're not nice, don't even deal with them. But you can just create a time frame, expectations. Hey, in 2 weeks, if we didn't get this much, that much, one offer, those amount of showings or what have you, then let's adjust the price. And then in 6 weeks or in 8 weeks, whatever that is, set expectations. So there's a plan in place. Does that make sense? If there's a plan in place, there's set expectations. Call this time frame. Next slide. Most important factor to sellers, same thing. Take a screenshot, resume. If those keywords are not in your vocabulary, part of your bio or resume or what have you, hashtags when you do social media or different things, you're missing out, because today that's what sellers are looking for. reputation, honesty, trustworthy. It helps if you're a friend or family member, right? Or maybe you can be referred by a friend or family member. That counts too. And you have some knowledge of the area, right? And believe me, if you see, today you see people like doing videos, reels, or what have you about a new restaurant or a new this or a new that or what have you, they don't even live there. But the fact that they did that and exposed that, they're right now the experts. So again, you have to work toward it. Next slide. Just again, percentages of repeated referrals, indications. Next slide. Method is to sell a home. 91% still using us. We're not going anywhere. It's only getting stronger. By the way, with all the AI and all the excessive information out there and more tools and more what have you, it's actually getting overwhelming, not easier, right? What app to use? Oh, you only have 50 options, right? So we're the voice that will better explain how to guide them. So that's always the case. Next slide. Incentive offered by attract buyers, still highest position none. That's part of it, by the way, part of the BRBC changes and whatever, all the concern and all of that. Actually, it helps us to capture more commissions on the buyer side as a result. Next slide. Was it fast enough?
It was pretty fast.
Okay, hey.
A lot of information. So 3 things that I got from this takeaway. First, agents are still relevant in the marketplace. So be out there face to face is crucial. People are still buying and selling real estate based on the trends. They're out there, regardless of the market going up and going down. They're still out there buying and selling and investing. And then third, utilize the 3 biggest ones and utilize that as your bio or conversational piece. In my opinion, you're going to lock in more listings and more buyer consultations for them to work with you. So, Manny, thank you very much.
Thanks, guys. Thanks for being here. I appreciate it. Do this too.
All right, rapid fire. I know we're cutting it short for broker tour, but let's continue. Next slide. Do we have slides? I think the stats just went overboard. So, all right, so we'll just conclude it. And if you have any, yes. All right, come up here, Jim.
French Bells Race at Purple Ridge went active yesterday. It's a completely remodeled 2,400 square foot house, 5 bedrooms, 7,800 a month, but it's brand new inside. Also, I just listed a property in Malaga Cove, an icon property on 760 Via Del Monte, the corner of Caneo and Via Del Monte for $2,995. It also has approved, stamped, and permitted plans for a 5,000 square foot house. So you could buy the house at $3 million, or you could buy the house at $3 million for another $200,000. We'll give you plans that you can start building tomorrow. So if you know any builders are looking to do a speculation home in PV, there's not many of them going up. Louis Tomorrow's building one next door, but it'll be probably close to a $7 to $8 million home after it's completed. So also, I have another new listing on a brand new townhouse, 3-year-old townhouse in Walteria. Minutes away from the beach, but it's very expensive. She paid $1,350,000 for it. I have it listed at $1,450,000. She's just trying to sell it and get her money back. But it's 3 bedrooms, 3 bath, turnkey. Has a backyard, enclosed backyard. It's on 3918 West 242nd Street, which is the first street after you cross PCH going up Crenshaw Boulevard. If you don't have any other questions, give me a call and I'll tell you a little bit more about it.
Awesome. Thanks, Jim. All right. Well, that concludes our team meeting. Thank you very much.
Simon.
Yes.
Is it okay if I quickly
please do.
Let everybody know about my Brokers Open, which is about to start at 12 p.m. till 2 p.m. There's going to be tacos, and this is going to be at 15213 Arcturus Avenue in Gardena. It's a beautiful turnkey single family home. It's fully updated, has paid off solar panels. So come through and take a look.
What's the property address?
15213 Arcturus Avenue, Gardena.
City of Gardena. Okay. Awesome.
Come by and get some free lunch.
Free lunch. All right.
Thank
Thank you very
you.
much. All right, team, that concludes. Thank you very much. Have a great afternoon.